Okay, so hope everyone's doing good. Welcome to another session. Welcome to another Sunday webinar, as always. Um, Last week was a good trading week. We had a look at a few trades, and I think this was one of them. The CAD JPY falling was one of the ones. I think Euro JPY is also one of them. Yeah, it's one of them. We played out perfect. I mean, I was looking between this one and this zone as the maximum, but between as the entry point, and it did play out nicely. So I think all three trades we had last week played out exactly what we wanted. So that being said, this is a new week, and we move on to new analysis. So if you want me to analyze something specific, can you please type it up in the chat room, and then I'll do the analysis as we move along. I'll give you some time to type whatever you want me to analyze in there. Also, if you have any questions in regards to trades, or maybe in regards to last week's trade, or anything in general that you want me to answer in regards to trading, I'm hoping to answer those questions for you. Just so you can also type it up in the box below, and I'll get to that. Okay. So we just have Euro AUD. Is that the only thing that you would like me to analyze today? I mean, I have no challenges analyzing just that, but I feel we have a little bit of time to utilize, and we can look into more on that. But if that's the primary, then that's fine. Okay, Euro JPY and GBP USD. Okay. All right. Not to worry. Let's get that. So we got three strategies: COT, seasonality, volatility. So for those that have been here before, you understand how we use these three tools. So we have the COT report, the seasonality, and the probability. COT shows us exactly what the commercials are doing. So people that don't necessarily make money out of speculating the market, so they don't make money the same way we do. They make their money primarily from attaining these currencies, and then they use it for their normal day-to-day transaction. So for example, if they want to buy something in Japan, for example, they need their currency to buy something there. So they convert the euros, for example, to Japanese yen for them to buy that resources in Japan, and vice versa. So they're not really into making money out of the market going up or going down. That's where the COT falls in. And then seasonality is a strategy that looks at the season of the year, just like we have the four seasons in UK here, winter, summer, spring, autumn. We have those four. So the market also has the time that it actually becomes bullish, the time it becomes bearish, the time it consolidates. And then the third and the final tool, one of my personal favorites, is a probability tool. It's kind of like how the casinos always know, like, we have a 51% edge in this thing, 52% edge in that way. And this tool was literally provided by me and a few other people within my team to get this tool. We literally had to go through a lot of information and use that to come up with statistics for the days of the year that's best for us to trade. Now we use these three tools in combination with our technical analysis, to help us depict which direction in the market is best for us to go. That being said, let's get right to it. So the first asset we're going to be looking at now, I don't look at trades in regards to in regards to pair. I look at them individually. Then from that individual, I break them down into pairs. So we go first with Euro, because I like to look at the futures first. Euro, AUD, then we have JPY, we have GBP, We have USD. Okay, this is literally almost all the entire assets. We have NZD. Welcome, Mr. Ozo. And we have CAD. Yeah, I think that's it. We have those seven right there. Literally look at that's literally all the entire seven. Okay. So what we're gonna do now is we're gonna look at the CO2 report. I'm gonna look at every single asset. So we don't have CHF into that. So we have USD, we have Euro to look at, we have CAD to look at, NZD, GBP, we also have AUD to look at. And I think JPY as well. CHF seems to be the one. Okay, cool. So what we do is we'll look at individual assets and then use that to look at which direction the commercials are going into. So the first thing we see JPY right here. What I spoke about is this: commercials are the people that don't really make money off of the market. They literally use it to do their normal day-to-day transactions in the world. Non-commercials are people like you and I. We speculate the market, we make money through it by going up and down. We ride that move. Now, I don't pay attention to this side of the table, the non-commercial. So this entire three rows right here, or this three columns right here, I'm not really, not really of interest to me. Right? Where I pay attention is just this two right here, these two columns right here, which is the long and the short. Long means to buy, short means to sell. And I don't even pay attention to this figures. I pay attention to the changes which happen around this period of time. Now you can see this is a 20th, right? CO2 report comes in once a week. So it's one of those assets. It comes in mostly on Tuesday, comes in once a week. And we use that information to depict where the market is going to go. I mean, it's a lagging indicator, it's not real time. So you have to you have to use it with other parts, not just by itself. Okay. So that being said, what I look at is the changes. See the changes right here? I just look at the changes over time. Now, if I see them adding more positions to the long side and taking away positions from the short side, I automatically just focus on just the long and long. And if they do the same in the opposite direction, I'll focus on short and long. So in this scenario, when they're not adding positions, they're taking away from their long and their short, what I'll do is I'll delete JPY out of that list. So JPY being the base currency of anything, I'm not going to use it for analysis. But that doesn't mean that I can't do Euro JPY, for example, if Euro is in alignment with it. That being said, let's go to the next one. AUD has the same thing. So for that reason, we take out AUD out of that list. The next thing we have right here is we have pounds, GBP. Same thing applies. I don't need that. I'm going to take that out. So what I'm doing literally is any asset that doesn't have the commercials aligned with it, I'm taking it off the table. And the primary reason for that is I don't need, anything I'm not sure of. I only take assets that I'm sure is going to go in my direction. Now, that being said, let me put this out there, a disclaimer for everybody. I'm not saying I know everything about the market, right? And I'm not saying, I'm a guru in the market. This is the way I personally approach the market. So I would recommend everyone approach the market in the way they feel comfortable. So don't take this information as a primary source that I said this, you go trade that. No, I'm saying it basically for information purposes, saying this is what I can see at the current moment, and you can trade accordingly if you feel that's okay for you. So I just have to put the disclaimer out there for you guys to know what's going on. Right. The next thing is I'm looking at NZD and I see they added 5,000 new position. They're taking out positions from the short side. So my primary focus now goes to NZD, which I'm just going to put long right next to it. That's all I'm going to do. Long. Right. Next thing, I go and check CAD. CAD also looks good. Now, in this scenario, I'm also going to put long right next to CAD because they're going long, right? Cool. The next thing after that, let's check Euro. Euro doesn't have neither long or short. So for that reason, I'm taking out euro out of that entire list, right? So euro deleted. And last but not the least, USD, the same thing. They're neither going long or short. So USD out of that list, which then leaves us with just two trades, right? We have NZD, then we have CAD. Now that combination alone should give us about 14 trades, based on NZD and CAD by itself. So the next tool we're going to look into is we're going to look into the seasonality. Now, remember I spoke about the seasons of the year. Every asset behaves differently every season, different seasons. So in this scenario, let's look at what NZD is going to behave like during the season. So this is the season so far for the past 25 years, right? So the yellow is 25-year season, the red is 15 years, and the five years is the blue, right? So it shows how they move. And I'm only going to take trades, right, if all three align, just like right here, right? I'm not going to take trades, for example, in scenarios that there's no alignment. Like right here, is this consolidation going on right here? I won't touch the asset, right? Or here, for example, 5 years is telling me short, 15 years is telling me long, 25 is telling me short. I won't touch that. I don't want to take trades like that. I'm only going to take trades that have alignment like this, right? Everything pointing in the same direction. And I don't want to take 1 or 2 days trade either. I want to take a chunk. At least let me find 4 or 5 days a week trade maybe. Then I'm more comfortable to trade it. So that being said, let's go straight into it. So currently at this moment, we are right around here. We're here right now. So tomorrow we go here. And if we look at the NZD, it says long, right? Now, if you look at it, the 26th, right? The 5, all 3 goes long on 26th actually, to 27. Well, not long after, the 15 and the 5 years dropped after, and then they kicked back up. Well, ideally, by the 30th, the 25 years and the 15 years is saying long, right? And the 5 years is actually looking like a consolidation. Doesn't really move that much from around here. So I'm gonna go here. So the long is there, but it's not as much as I would like it to be. But overall, when you look at it, overall, it shows that it might actually go long. So what I'm gonna do in this scenario, for example, is I'll put it long, but because of the 5 years going against it a little bit, not really looking exactly how I want it to look. So we have up to 30 right here. Let me just check the calendar for a second. Right here to Friday. We might be able to take this trade maybe from tomorrow, for example, but watch out when it comes to Wednesday. We might have a pullback between Tuesday and Wednesday, and then market moves back up. So I would call it a medium risk trade. So what I'm going to do is I'm going to say NZD on 26th. So now keep in mind, I'm just going to put a risk right there next to it. There's a risk on that because of the 5 years pulling down, right? And then the next asset I want to look at is the CAD. All right. Now, if anybody don't understand what I'm doing, or you have a question, once I look at the CAD, feel free to ask the question before I go into the probability tool. All right. So let's check. We are currently right around here. So, just going to zoom that in. Exactly the same thing that I've done before. There's not much difference. Now with the CAD on the 25th, and it's telling us to go short instead. Now for that reason, from the 25th right here up until here, all 3 is looking like short. All right. So for that reason, I'm going to delete CAD out of the list because COT is telling me to go long, or seasonality is telling me to go short. Therefore, I'm going to play it safe, and I'm not going to say, oh, one might be more correct than the other. I want them all to focus on the same angle. So that being said, that's done for seasonality. If you have any questions, you can pop it into the chat room. We can message that privately, or we can continue if you understand. So the next thing to do is go NZD. Just going to look for all the NZD pairs. Now, keep in mind, the initial thing I did was I looked at every asset individually, and then now I'm looking at them as a pair. Since I know where NZD is going, and if I have the direction that NZD is going long, that means everything else I pair against NZD, NZD is going to win that trade against that asset. So NZD CHF should be looking long, NZD JPY long, Euro NZD should be looking short. So anything that comes after, if NZD comes first, it's always going to go long. If it comes second, it's, the asset's going to go short. So that being said, we'll look at NZD CHF. I think someone actually mentioned NZD trade I need to look at. So NZD JPY was the first one mentioned. So I'm just going to go to NZD JPY. And let's look at what we can find. Now I prefer to have 3 days in this asset. Okay, so what I can see here is, according to the probability on the 26th, let me go back to the side so you can see, 26 is telling me to sell, while here it's buy. So 26 right here is telling me to sell. So that for that reason, I'm not going to go into NZD on this day, right? So on the 26th, I'm not touching NZD on 26. On the 27th, 28th, 29th, 30th, I have 3 days pointing long in that direction. So NZD JPY 27th to 30th. Oh, right. So I have those 4 days pointing long. Now, just to go back to the exact asset that we're looking at on the technical side. And if you've never seen a trade analyzed like this before, I mean, I tend to use a more logical approach to the market rather than using just the technical side of things alone. So I use a little more fundamental information. So that being said, what we know is NZD JPY 27 to 38 is long. Looking at the chart already, what you can see is it's been falling for a while. So the possibility of it kicking back is actually very high. It is very high. I mean, it's a no-brainer. It's looking high. And look at the weekly, for example. Price just literally stopped at the 50 EMA, broke through the 20, which has been giving it support at this point before, broke through it easily, which means there's a likelihood that this week NZD JPY is actually going to go up just as expected. And if we look at it on the monthly asset, I'm just going to monthly timeline, what we can see is it's getting support from this region. Now, what I'm going to do next is I'm going to do a series of 2 things next. And Mr. Uzo, I think you asked about this last week, that the average wick size, what should we use? If we should use the weekly or the daily. Now, let's start off with the weekly first. So what I'm going to do is I'm going to use this indicator called a candle wick display. And what it does is just calculate the wicks from here to here, from here to here, and the other side. Now, because we're looking to buy this asset, we're looking to go long in this asset, what we're looking for is the previous 5 candles, and we calculate the average wick, and we use that as our base of entry for the weekly, and then we look at it on the daily as well, and we use that as a base for entry on the daily. So the first thing we're going to do is we do 4 plus 6 plus 49 right here, plus 130 plus 61, right? That gives 250. You divide that by 5, that gives 50. So what we're looking for on a weekly time frame is price should pull down an extra 50 pips from where it currently is right now before we even consider to go in. So price should pull somewhere around here. I'm not sure if that's correct. I'm gonna get it just anyway. Yeah. That's 45. Yeah, whatever. I think that should be sufficient. It's gonna change the color. So that's for the weekly side, and I'm trying to get a range. So the next thing I'm going to do is I'm going to look at it from a daily perspective. Now, I would normally recommend you do is probably at the end of tomorrow, when the candle for tomorrow is formed, you can look at it and then decide based on that, but if it's up or down. But we can still use the previous 5 candles that goes up. So for example, this one, which is 40 plus, the next one right here is 6 plus 16 plus 10 plus 4, right? And then you divide that by 5, which gives 15.2 pips. Right, so it's going to be somewhere around here. So what we have now is we have a range, right? There is a range here. In which case, you don't want to go into the market before Tuesday, right? Tuesday ideally should be your entry day. Now, keep something in mind. When we're looking at trades, sometimes we might have a specific date to go in, but the market might move prior to that date or might move a little bit after that date, right? But what you want to keep in mind is you now have a range. The entry can be anywhere between this range, right? If you look at it from a mathematical standpoint, entry can be anywhere within our range. But to make it even more precise, what I tend to do further is I use this this tool right here, support and resistance, and you can use any support and resistance you find online. Whichever one you find that is useful to you, that you like, you can use that. And what I use it for is this. I use it to find a support and resistance, which market is most likely going to go to. Now, if you look at underneath the purple line right here, there's already a support there, and that's support and resistance indicator, which means what we highlighted here already is in correlation with what the support and resistance zone is. Then I go lower to like maybe 4 hours and see if I have another entry line in between there. I don't have any. I'll go to 1 hour. I'm not going to be lower now, by the way. So what I can see is there's no other support and resistance region between this zone. I mean, apart from the one bang on right here. So, and the next one find is below here. So I don't need to highlight anywhere in between. If I found a place between, for example, in between this zone, I highlight that, and ideally I wait for price to get to that zone instead. So, but in this scenario, we don't have that. So what I'm going to do is I'll delete my support and resistance. I don't need that at the moment. So I already have this range. Right here. The range is about 29 pips wide. Now, to make things slightly more interesting, we can go on the 4 hours, and there's a tool called ATR. Every single MT4 has it, and I think every single trading platform should have, their own version of ATR. I just like to use the 14 days, the normal default. I don't go beyond that. And what it's telling me on the 4 hours is I have a 68 pips average true range, which is the previous 14 candles. The average range between those 14 candles is 68 pips. Now, for stop loss, I normally say you do whichever you feel more comfortable with, ATR times 1.5 or ATR times 2, whichever you're comfortable with, right? So in this scenario, for example, if we have done ATR, which is 68 times 1.5, you have 102 pip stop loss. Now, a lot of people will say that that's very massive. 102 pips is a lot. But what you're doing is you're going to wait for the market to pull into this range, which is the average wick size anyway. If the price is going to go up, the wick size shouldn't be ideally more than this. Now, let's say you got your entry around here, right? And you have a further 100 and 2 pips, somewhere down, let's say down here, the likelihood of market rating you is very low. It's literally very low because it has to do beyond its average wick and then go there and kick you out. If market does that, then the market is not really going up, is it? It's most likely just going down, right? Unless there's a spike or market manipulation or news happening, then you can get rated. But the likelihood of getting rated is very low. And if you do ATR times 2, the likelihood is even lower. So what I tend to do is have that as my stop loss. Now your take profit will be ATR, right? The first ATR value will be your first take profit. So I do ATR TP1, I do TP2, then I have TP3, right? So your first take profit is ATR, your second take profit is 2 times ATR, and your third take profit is you have to leave it. So just let it ride, right? So your third take profit is let it ride. So if you go in, let's say somewhere around in between the zone and you set a stop loss and you take profit, once the price moves 68 pips in your favor, you lock it in. You take your first profit off the table, you lock all the rest of your trade in profit. Now, when the price moves a further 68 pips from where you locked your price in, so which should be about, if I'm not mistaken, 132, right? No, 136, right? What you should do is take your second profit off the table, then move your stop loss from your third entry to the first 68 pips. And the third take profit, you can then exit, on the 30th, right? So in essence, what I'm telling you is if you structure your trades accordingly, the likelihood of being rated is lower. Now, there's one other tool that I haven't actually shown here, and I normally do this every time anyway, is Williams spread. Now, Williams spread helps in telling us what's most likely going to happen before it happens. So in scenarios like this, for example, when it points ahead, basically, I don't use it in a way like I don't use it to analyze every small thing. I just look at it. Is it pointing up? If it's pointing up, the likelihood of the trade coming up is high. When it's pointing down, the likelihood of it coming down is high. It's not fully accurate, but you have like about a 70% on it if you use it correctly. But it doesn't tell you when your entry is, it doesn't tell you when your entry exit is. It's just like an intuition tool telling you like, look, be careful, price is most likely going to fall. So fall right here, it happened, then the rise is coming. So most likely what we're going to see next is the rise will follow, right? And I've been using this tool for a while now, and it's been beautiful. I use it as a confirmation indicator for my COT, seasonality, and probability. Therefore, looking at this NZD JPY trade, I'm going to go in, what's called on the 27th, come out on the 30th, and this is how I'm going to position myself, my stop loss, and my take profit, right? And once that is done, that's it, literally. Now, keep in mind, there's other trades that I haven't looked at yet. Maybe the Euro NZD, for example. If we look at the probability tool, let's see. It's telling me to go in on the 26th, but then it comes back down, then go up. Now, the people that know me, I don't do this. I don't trade. If one day is telling me up, another day is telling me down and all that, I don't do that. So I'm just gonna stay away from that. The next thing I look at is NZD USD. Now keep in mind, because NZD is going long, so I'm expecting NZD to be a buy. Therefore, look, it's going up, down, down, all this I don't like, so I won't trade that. Let's see NZD CAD. NZD going up, down, up, down, up. Oh, wrong date. Yeah, so NZD is telling me it's flattening out. I won't trade that because I'm expecting NZD to go long anyway. So all of this is indicating that NZD won't be strong against CAD. Same thing. Let's go check GBP NZD. And GBP is going to be weak for 2 days, then go up. So ideally, this would be okay, but I don't like that 1 day against it. So I could have gone in maybe tomorrow, for example, on GBP NZD, selling GBP NZD, and then Wednesday I have to be careful, which then reflects what seasonality was showing anyway. If I have to, let me just go back to seasonality and the NZD. So ideally, what's happening is 2 days down, 1 day up, 2 days down. It's risky, but I don't really like it. I would prefer it to be straight going down, or maybe from Tuesday all the way to Friday going down. So I'm just gonna go. Yeah. So 26th, 27th. Even with the current one we have here, we have to be very careful because there's that drop from 27 to 28, from and possibly to 29, but that recovery should at least shoot it higher. So what's most likely going to happen is the day that we're going in, which should be 27, we have to be very careful. You want the market to pull down properly. So ideally, maybe to the highest point, that the lowest point is it's down here, which is around 43 pips from where it is before you even consider going in. Unless you see a consolidation in this place and then the market pulls above, then it's safer. But from the looks of it, from the seasonality, it's actually risky. For that reason, I'm actually going to label this high risk. High risk. It's a high risk just because seasonality does not fully align. That being said, though, with the GBP NZD, I wouldn't trade it because of that, opposite right there. It's still, I mean, if you're skilled enough, you can still take it, but I personally just don't like to risk money when it's not necessary. And then AUD, NZD, AUD is getting stronger while we're expecting NZD to get stronger. So yeah, we already checked this. NZD JPY looking good, and then yes, I like this. Yeah, we have NZD 2 days up and 3 days down. So altogether across the table, we don't see any proper alignment for NZD the way I like it anyway. But we see it on NZD JPY, and that reason, Mr. Uzo, which is the trade you chose, I would go long on this. Keep in mind it's high risk, but the reward should be great on this asset. Ideally, if you ride it from whenever it is, start moving, you should be able to maybe take 200 pips. If you're lucky, 300 pips from the straight. Okay. So that's the one trade we literally have time to look at. I mean, not technically one trade, but we looked at quite a few. I've actually looked at Euro AUD, Euro JPY, GBP, USD in that entire sequence that we've gone through right now. And the only trade that has that alignment is NZD JPY. So that's all I have for you guys. Does anyone have any questions in regards to this? Have I confused anybody on anything? And if I have, you can rewatch the webinar again on YouTube and then use that to decide, what you wanna do. Okay. So if you have any questions, please post them in the chat. We have like 2 minutes. If not, then what we can do is we can wrap up this session, and then I'll post the video on YouTube, and then I wish you guys a lovely trading week. There's more assets we can check. I mean, there is more tools available on the website for you in regards to seasonality for stocks and other pairs that we can look at. We didn't look at the AUD, for example, and we didn't look at gold, for example. There should be more trades that are in alignment. And from what we've seen so far, NZD JPY seems to be a good trade. So for that reason, I'm going to take NZD JPY and I'll check if there's any other alignment. So if you need the tools, you can get them from the website, which is business.dmempire.co.uk. You can go to the pricing section and get that tool and then use them accordingly to the trade. And if you have any questions, just hit me up on Telegram and I'll be there to answer your questions. Okay. So thank you very much for attending this session, and God bless you all. Have a lovely trading weekend. Take care.